Hello everyone and welcome back. Alright, so today we're going to talk about something a little fun. It's for new investors, brand spanking new investors. Okay, so this is the top 5 mistakes that I see people make, and I have even made some of them myself. So I'm just trying to warn you guys so you know not to make these mistakes, so hopefully you don't lose any money and preferably make those gains keep on coming. Alright, because we don't want to stop that. We need to keep them going. Alright. So let's dive into it. I'm going to list them one by one and then I'll talk about them. So number one. Number one is not planning. Not planning is an absolutely crucial step, okay? You need to have a plan. So no matter what you're going to do in life, I think it is best that you have a plan. I'm a huge believer that before a battle is even started, it is won or lost just based on planning. No matter what you do in life, I think you should have a clear plan. Obviously, things don't always go according to plan. I know my life in many aspects has not gone according to plan. That's not necessarily a bad thing. I'm just saying it's just like that stuff happens, right? So you should have a plan though, and this plan should go over what you want to do. Do you want to invest? Do you want to trade? Like, these are things you have to know. What are your goals, okay? So have goals, have plans. That's step one before you even make an investment. Make sure you have a plan, okay? I can't stress that enough. If you're going down a road, you need to know where you're going. You need to have a clear vision of what's going to happen. So making a plan is a crucial step and you need to do it. Number two. Number two is not doing your homework. This may sound weird or might totally make sense, but stick with it for a second. In school, what do you do if you want good grades? Well, you should probably do your homework. There's a few things you should do. You should show up for class, be punctual, pay attention, take down notes, do your homework, study. It's honestly no different in stocks. Whether you want good grades or good returns, you gotta do your homework, okay? You gotta study whatever stock you're gonna invest in. You gotta read those 10Qs. You gotta read those 10Ks. You gotta listen to those earnings calls. You gotta check their balance sheet. You gotta see if they got anything new in development. You got to see their debt. What is happening with the company, okay? You got to do your homework. I want you to know about the company. When I first started investing, I was like a sponge and I soaked up everything I could get. I was so in love with learning about investing. I couldn't get enough of it. Honestly, I'd spend so many hours doing this. I don't do as much now just because I kind of don't need to. Now, I'm not saying I don't check the business. That I absolutely do. I just don't check the other stuff, as in everything. I would need to know about dividends. I need to know about options. I need to know about this and that. You got to know about that, okay? So you got to do your homework. You have to basically become a pro without even trading or investing. You got to be a pro before you even make a trade or invest. And that might sound scary, but it's actually not. You just got to fill yourself with as much knowledge as you can and be better prepared for the task at hand. And the task is to make lots of money. All right? So whether you want good grades, good returns, do your homework. I want you to do your homework. Anyways, let's move on to number 3. Number 3 is going to have to be listening to others, okay? Now you should hear what they have to say, but don't follow what they have to say if you don't agree with them, okay? And don't take their advice as it's gold, okay? Many people are wrong when investing. I know I'm wrong when investing, and I may not like a stock, and you may love that stock, and that's totally fine, and vice versa. My biggest investment is Apple, okay? You may hate Apple. I honestly don't care if you hate Apple, because that stock suits me, and I believe that stock is the best fit for me, okay? It's one of my holdings, and I firmly believe in the company. Now, you may hate Apple. You may be a huge Samsung guy or a huge Huawei guy. That's fine. I don't care. Like, what does it matter to me? I'm an Apple guy. If you don't like it, that's fine. I'm wearing a black shirt. If you're wearing a white shirt, does that mean you're against me? I don't think so. But if you want to see it that way, then that's one way of seeing it. My advice for this one is just don't listen to others, okay? People can be wrong all the time, and definitely believe me, people have been doing this for many years are wrong. Warren Buffett looks like he was pretty wrong on Kraft Heinz right now. Sure, the stock will more than likely go back up in the long run. However, it might be a very long time until he sees his money back. Possibly 5-10 years. that's a long time to get your money back, okay? I'm not saying he won't or anything. I think he's a great investor. But even he's wrong is what I'm saying, okay? He's considered the greatest investor of all time. And even he's wrong. At the end of the day, look at this. We got skin, okay? We got a nose, we got eyes, we got ears. I'm human, okay? You're human. Unless you're Elon Musk, then you might be an alien. I'm not sure. But as far as I know, everyone else is human. And we all make mistakes. I bet the first time you rode a bike, you probably fell at least once. I know I fell at least once. I fell many times, okay? I fell countless times until I finally learned, and then you basically never forget. And don't be afraid to not listen to others, okay? Carve your own path in investing and in life. Don't follow what they say as it's gold. Stick to what you know and do what you believe is best for you. At the end of the day, it's your money and it's your choice. Anyways, moving on to number 4. Now, number 4 is catching a falling knife. Okay, so if you don't know what a falling knife is a stock price that say was at $100 and it kind of looks like this, say, kind of starts to go like that. And now maybe it's around, I don't know, $30 or something like that, okay? And your thought was that at $50, when the stock price cut in half, you could just buy it, and it was a good buy because it had cut down by 50%, so you could 50% make more money than lose your money, okay? That's just a simple concept of a falling knife. Well, they're called a falling knife for a reason. If you don't know, if you try and catch a falling knife, chances are you get cut. When you get cut, you start bleeding. And in this case, when you get cut, you start bleeding money, okay? That's simple terms for that one. And there's many examples of falling knives in the stock market. You could say Kraft Heinz right now could be a falling knife and might be a falling knife, right? Okay, other falling knives, you could say L Brands. L Brands was about $100 stock. The stock trades around $27 right now, okay? So this stock has dropped from its high about 75%. Imagine at 50, you're like, oh great, I could catch this company and it's gonna go to 100. You would have lost about 50% of your money since then, okay? So this is a falling knife example. I'm not saying the stock will not go back up, but don't buy a stock just because it dropped 50% or more and you think it's easily gonna go back up. This goes back to do your homework, okay? Don't just buy something because it looks cheap. It may not be cheap. Chances are, if it's come down that much, there's probably a good reason why it came down that much. So make sure you know why it came down that much. If the fundamentals are really bad, don't buy the stock. Plain and simple terms, stay away from it. It's the best thing you can do. Many investors will probably try and catch a falling knife. This isn't even for newbies. Even investors who've been investing for a few years or even longer could see a company that they once believed was really great come down this much and believe that it's no longer a falling knife. It's a great company, it's gonna go back up. Chances are they're gonna get cut. Not always, but chances are you're gonna get cut. So just make sure you do your homework and you make the best decision possible. Moving on to number 5. Number 5 is gonna have to go to dividend traps. So if you don't know what dividends are companies pay out some of their profits to investors, aka shareholders, okay? So this comes in the form of money, or could be stock, but more than likely money, okay? So most companies pay quarterly, so every 3 months they pay you money to own their shares. Some companies, like say Disney, is semi-annually, so they pay every 6 months. Companies like Walmart pay once a year, and some companies even pay every single month. Those ones are harder to find, but they do exist, okay? So a big thing with dividend traps are, L Brands actually was a great dividend trap. L Brands used to have a fairly low dividend yield when they were a $100 stock. However, when they went way down into say the $29, $30 range, somewhere around there, their dividend was like 7+%. That is a really high dividend, okay? An issue is that's a really attractive dividend yield, so people are drawn to that. They see, oh wow, that's a lot of money. The stock doesn't even have to go back up, or look at this, the stock's gone so down, I'll get this money to own this stock, and then when it goes back up, I'll make even more money. That's a dividend trap, okay? I did make a video on L brand stock actually, and I had said that they had to cut their dividends because they were paying out something crazy. I think it was around 86% or 78%, something very high, okay, that I knew basically they just had to cut it. It just made the most sense. And guess what? They cut it, and investors, aka shareholders, do not like when companies cut dividends though. It's just a big no-no. It means a few things. It means, one, you just can't pay as much money as you used to pay out, so chances are your company is decelerating, which is never a good sign. Wall Street does not like deceleration at all. That is like a huge no-no for investors, okay? So if they cut the dividends, the stock is gonna go down, okay? So you're gonna get hit by not making as much dividends, and your stock price is gonna go down. So watch out for these high dividend traps. The best advice for this one is to see how much they pay out. So here, I pulled up Disney. So Disney is a company that I actually own. They do pay semi-annually, so twice a year. They don't pay very much in dividends. They pay only a 1.55% yield, which is about $1.76 per year. So the payout ratio is 25.4%. That's a pretty low dividend. It's only 25% of their profits are going out. I would say you want to stick to companies that are under 50%, okay? If it starts getting around 50%, I would maybe be cautious, okay? And if it's over 50%, I'd say stay away, okay? I don't like companies that pay out most of their profits to dividends. It means that they don't have money to put back into their business to grow their business, which is something I don't like to see, okay? So that's something you should watch out for with dividends. So definitely watch out for high yielding dividend traps. I know they look good on the surface. You can see, you know, I can make this huge percent, and some people may buy in them just to get a couple of the dividends and then sell out. That's risky though, honestly, because you're kind of short-term trading that one. I mean, it works for some people. I don't want to do that, but hey, some people are dividend hoppers and they hop from dividend stock to dividend stock to dividend stock, and that's what they do. And if it works for them, hey, more power to you. As long as you're making money at the end of the day, I'm happy for you, okay? The only thing I don't want is I don't want anybody to lose money. I don't like when people lose money. I want their families to be happy and flourishing and great and everything. Honestly, why not? What's so bad in people being happy? I think it's great. So make more money, be more happy. Anyways, guys, so these are my 5 tips for brand new investors. You should definitely try and follow all of them if you can. Hey, maybe you agree with them, maybe you don't agree with them. If you made some of these mistakes yourself too, don't be afraid. Admit it down the bottom. I know I've made some of these mistakes. I've definitely tried to catch a falling knife and got cut, okay? That just happens. I haven't fallen for any dividend traps, but I almost did when I was looking into them. Believe me, I was very tempted to buy a few of them, and thankfully I did not, because every single stock I looked into, I had taken screenshots of them, and when I had looked back a year later, they had all cut their dividends and all the prices were down even further than that, okay? So double whammy there. You lose your dividends and you lose money. That's never a good thing. Anyways, guys, I hope you enjoyed this video. If you did like this video, remember to like this video. That would be super cool. Also, if you haven't already, remember to subscribe. That would be super cool as well. Also, maybe hit that bell notification. Always get notified when I post the latest and greatest videos. Also, guys, for new investors, for staying around to the end of the video, I'll tell you guys that I am actually starting an investing account. Yes, well, it's actually already started and opened, but I'm going to start depositing money in there. I'll tell you guys more about that in a few days, maybe a week or something like that. I'll give you guys updates on that, so you guys can follow along if you're a new investor and you can see me invest. I'm gonna post weekly, so you'll see the account. I'll put money in there weekly, and I'll tell you guys how you guys can contribute to that and help the account grow even quicker. I think it's gonna be really cool. I think you guys will appreciate it, and I hope you like it. Anyways, until next time, guys, see you later and have an absolutely fantastic, amazing, wonderful, one-of-a-kind day, and make tons and tons of money. So much money that you can't even carry it. Until next time, guys, see you later and take care.